What is the best investment vehicle? This is a very popular question asked by many. Is there any standard answer to this? Actually, when we are talking about the best investment, we need to define the requirement. If you have been looking around for some investment for some time, you will find that there is no standard best investment vehicle. Either you can get higher return with more risk, or you get stable investment with very low return. Is there any investment that is stable in nature and have decent return? Let's review in this video here. Hi, I'm Eva Wong here, your wealth coach to achieve early retirement. If you wish to learn how to become financial savvy and to retire early, remember to subscribe to this channel here. Talking about investment vehicles, this is quite a wide topic, so I will explain over several weeks. Remember to subscribe to this channel and turn on the bell notification so that you do not miss any of my videos. Talking about investment, let's get back to the basic. There are only two main types of investments: paper assets and real assets. Paper assets are stocks, unit trust funds, exchange traded funds, and etc. Real assets are gold, antiques, properties, and etc. For paper assets, basically they are related to stocks. Unit trust funds and exchange traded funds are collective stock investments managed by the professional fund managers. To understand more about unit trust funds, you can check out my previous video here. Stocks are company shareholding. When you invest in stocks, you are investing in businesses. If the businesses make money, you get a portion of the profits as part of the shareholders. If you select the right stocks, you are able to make quite decent return over a period of time. For example, if you invest in McDonald's stock for past 30 years, the average return a year is 12%. If you invested in Nike for the past 20 years, you get average return of about 18% a year. How about ETF? Look at the famous S&P 500 ETF, which is the SPY. For the past 10 years, it has grown from $140 per share to $443 per share. This is equivalent to compounding annual interest of 12% per year over the last 10 years. How about the unit trust funds? For example, this fund, if we invested 10,000 ringgit since 2017, the expected value now will be 18,389 after 4 to 5 years. This is equivalent to nearly 13% of annualized return. Personally, I feel this type of return is great. Comparing to fixed deposit of less than 2% per year, paper assets are definitely better in return. However, is it that good? If you look closer again, the bad thing about the paper assets will be the volatility of the price. Paper assets do not always go up in a straight line. There are times which the asset value will drop. For example, for the S&P 500 Index Fund SPY, the highest price of the past 52 weeks is $479 per share. If you bought during the high time, you will find that the asset value depreciated to $443 per share as of April 2020. It is a 7.6% drop just within 3 to 4 months' time. So back to the question, are paper assets good investment? The answer is paper assets can give you good return over a long period of time, but they cannot provide you the stability in price. You need to learn how to tolerate with the price fluctuation to select this as one of your investment vehicles. Next, let's go through the real asset. Let's start with the property investment this week. Is property a good investment? Personally, I feel that property can serve for two purposes. One is the capital gain, and the second one is rental income. What is best about property is that I can see what I'm buying. In addition, I can borrow money to buy this type of assets. Let's zoom into its return. As you can see from this chart here, property prices do increase every year. Even if they do not increase, it is unlikely to fall based on this price chart since year 2000. Property prices have been quite stable over the past 20 years, but looking at the growth, is the return really good? Looking at this price chart again, property prices hardly increased more than 10% except from the year 2012 to 2014. Hence, I shall conclude that properties can be good investment because the price is quite stable and the return is above fixed deposit. But if you want double-digit return, it can be challenging for property investment based on the data available. What about the risk? Despite that property investment seems to be good, the disadvantages of it are the tenancy issues and the legal matters like the loan agreement, sales and purchase agreement. Property investments are not cheap. one needs to have higher capital to start off with this type of investment because there are many miscellaneous costs involved, such as the property down payment, legal fees, renovation fees, stamp duty, and etc. After the initial cost, every month there will be ongoing recurring expenses such as the maintenance fees, insurance costs, loan installments, and etc. Hence, the financial commitment will be a long-term one. Before one decides to go into property investment, one needs to have proper financial planning. If you don't plan well, it can be a disaster later as you can't stop the financial commitment once started. In conclusion, if you want a more stable investment, property investment can be a better choice. But if you need higher return investment, paper assets can be chosen. We shall talk more about other types of investment vehicle next week. And stay tuned. That's all for my sharing this time, and thank you for watching this video, and I do hope that you like it. Do comment below what have you learned from this video, and subscribe to my channel for more early retirement tips, and I hope to see you again. Bye!